I'm in agreement that we haven't reached the bottom in Bitcoin yet. It doesn't mean we're not going to get bounces. And I think sentiment is somewhat on the bearish side right now. So we may have a short-term bounce coming in Bitcoin, but I don't think the bear cycle is over for a couple reasons. Number one, you have the stock market that I don't think has bottomed. The US is kind of moving towards a recession. We know there's generally a global recession on the horizon as well. So all of these things will take money away from people that would normally maybe invest some in Bitcoin. So you have those metrics going on. In addition, past cycles, Bitcoin's always corrected 80 to 85%. We've only dropped about 70 to 75%. So you would think that there'd be a little bit more downside. And in addition, I don't think we've seen a full washout. One of the comparisons I drew before with the dot-com era in the late 90s and early 2000s, you really saw this nasty washout. And we really haven't seen that. You've seen some projects go bankrupt. We know Celsius and a few other things, but you haven't seen a real major washout yet where you've demolished and a lot of coins have gone to zero. And so I think you still have to see that full washout, which is actually very, very healthy for the market. It's what you want to see if you're a long-term believer in Bitcoin like myself. Now, in terms of a worst case scenario, so my general target, my best case is 12 to 13,000. That's where I think the best case would be. My worst case, unfortunately, would be 3,500, which would put it in alignment with Amazon.com's .com collapse. So in 2000, Amazon.com topped out in the .com era, and it collapsed 95%. And so if Bitcoin were to do that, it would put it around 3,500. That would be the worst case scenario. So I'm not sure if that'll happen though.
Hello and welcome to Money Talks. In today's video, the president and chief market strategist at InTheMoneyStocks.com, Gareth Soloway, updates about his worst-case scenario for Bitcoin in October and coming months. Why are the banks and markets collapsing, and whether or not we have reached bottom for Bitcoin and gold. Gareth also reveals the fundamental strategies that helped him in predicting Bitcoin's crash from $60,000 last year to $20,000 this year. Make sure to stick around till the end of this video where Gareth reveals why he is highly bullish for Bitcoin in October.
So there were a lot of things, a lot of red flags going up. And in general, what you'll notice in cycles, in market cycles, is that when we have a major move like we did in Bitcoin, there's a tendency for it to go back and retest the previous cycle high. So that's where I got the 20,000 from, is that was the 2017 high. So it made sense that if we had a collapse, we would go revisit that level. Now, in terms of the psychology of investors, what I was seeing in October of 2021 into November is that we saw a lot of irrational exuberance, much like the dot-com bubble in the late 90s, where these penny stocks were going from a penny to 3 pennies to 10 cents to $1 to $5. And it was much the same with Dogecoin, Shiba Inu, and some of these other coins out there. So a lot of the similarities were going on. In addition, what we saw was a classic double top in Bitcoin. And so while everyone else was saying, oh, this is going to be the next rip, I was just purely looking at the chart and saying, you know what? This to me looks like a double top with investor sentiment that's even more bullish. And what we call in the technical world, when you have more bullish sentiment but a double top, it's basically a negative divergence. It means that Bitcoin's price should have been much, much higher with so much bullishness, and it wasn't. It was back to those highs from March of and April of 2021. So all of these kind of factors were culminating in saying that, okay, we have a major pivot top here. And then the question was, what type of pullback would we see? I recognized that the Federal Reserve was going to be cutting back on their quantitative easing and raising interest rates, which would suck liquidity out of the market. And all of those would contribute to a big fall on Bitcoin.
This week, major cryptocurrencies were selling in the green as the global crypto market value climbed 0.2% over the previous day to $918.72 billion. In contrast, the total crypto market volume fell 8.2% in the last 24 hours to $49.5 billion. The overall volume in DeFi was $3.14 billion, accounting for 6.35% of the total 24-hour volume in the crypto market.
So in October, at least for us now, I'm actually slightly bullish near term, but going out 4 to 6 months, I do think we head back down. I think by mid 2023 to the second half of 2023 is when Bitcoin would bottom out per the last few cycles. And I think you'll see that coincide with the global stock markets having another leg lower once they see that we are in a global recession. And then the biggest question for me is that in past recessions, in past tough market times, the central banks have always come out and printed money. With the US now having a higher inflation rate, it's very hard for them to print our way out of a recession. And so if the Fed can't print us out of this next recession, it means it's going to be a long, drawn out recession. And that's going to be really tough for the financial markets to handle.
Bitcoin has plummeted by more than 5% in the last 7 days. The leading cryptocurrency, on the other hand, is now gaining immediate support near $18,870, the triple bottom level.
And I think the kicker here is, past recessions for the last 20 years, whenever we've gone into a recession, the Fed has started quantitative easing, which is printing money or lowering interest rates. We're going into now a new type of recession we haven't seen in a long time, where we have the high inflation. And we know that if they start lowering interest rates and printing money, then inflation is going to go even higher. So it's going to make the Fed unable to get us out of this recession, which I think keeps us in recession for a longer period than normal.
The World Economic Forum has received a fresh warning from the International Monetary Fund. According to the IMF, things will only get worse from here. As a result, the value of Bitcoin can drop in the near future.
You basically have this scenario where the Fed has kind of been the rescuer, the one coming to the rescue of the financial markets every time we go into a tough period. And they just won't be able to this time, at least not as early on as the markets would like.
According to IMF's chief economist Pierre-Olivier Gourinchas, more than a third of the global economy will contract this year or next, while the three largest economies, the United States, the European Union, and China, will continue to stall. The International Monetary Fund predicts that global inflation should peak late this year, but will stay elevated for longer than previously projected, despite the best efforts of central banks everywhere to bring it under control.
This is something that happened in 2008, 2009, as we know, with Lehman Brothers. And basically, when financial markets get extremely stressed, a lot of the derivatives credit markets, they start to freeze up. And it makes it very hard for banks to get liquidity and kind of stay functional. And that's what you're kind of dealing with Credit Suisse, Deutsche Bank, and potentially other banks as well. Now, right now, I don't think there's a real risk of those banks going under, because I think the Federal Reserve and the central banks globally will try to help them out. But it is a warning sign. To me, it's a big shot across the bow, where you have to start saying, all right, there's trouble here brewing, and investors need to be really careful here over the next 6 to 12 months, because it is telling us that there are problems in the system, that when the Fed's not actively pumping money into the world system, you're going to have breakages.
Bitcoin price could see a minor run-up to retest the recent broken bearish setup. This development is likely to influence Ethereum, Ripple, and other altcoins to do the same. Regardless, investors need to stay focused on the mid-term outlook, which is still pessimistic.
So in terms of fiat money, I think it's always smart to keep some money at home, just in case you go to the bank and the bank is closed down, or there's a grid failure or something like that, where you can't get anything out. Right. Yeah, exactly. Anything like that. So I don't have a lot, but I have kind of the emergency, amounts. And then I also am a big believer on having some gold and silver on hand, because again, even if you run out of fiat currency, or let's say the dollar collapses or any currency collapses, gold and silver should hold their value. And you could always, go buy something with a little piece of silver or something like that. So I think it's investing is all about figuring out the different risks and then kind of plugging those holes. So, you think about banks shutting down. Okay, well, I should have some cash on hand. You think about the dollar collapsing. For me in the US, I need to have a little gold and silver on hand. And it's all about kind of mitigating those risks. I've been a big fan of gold all year long. I mean, the dollar has been so strong that it's kind of put pressure on gold. But I'm a big fan of gold. I think, again, even though the Fed is going to resist printing money for a couple years, eventually they will have to, and they're going to be forced to, because things will get so bad in the global and domestic economy. And so the gold price is going to be one of the key values that I think will hold your value, whether you're in, any currency, frankly. I also think that eventually Bitcoin becomes a screaming buy. Once it bottoms out, I do think it has a pivot, and that will absolutely, be a storage of safety for you as well.
So, do you agree with Gareth Soloway's worst case scenario for Bitcoin? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.